All right, you guys, welcome. Doug McKay on the 4th of May, Friday. You can see down here it's about an hour and 15 minutes until the close, 2:44 Eastern Time. This is an hourly chart of the S&P 500, and currently we're down a little over 23. And we're going to open this up to a daily and then a weekly chart like we did last Friday or last Thursday. But in any event, we do have support on this hourly chart at around 1360. So quite possibly, whether it's today or sometime next week, that could be the next stop to see if 1360 holds on the S&P cash. When we open this up to a daily chart, again with a little over 1 hour till the close, you can see support here at that 1360 on a daily chart. This downward sloping trend line was part of wave 4 and or C, which is what we drew in last week. If you recall last week's video, we'll kind of rehash that as well. So it's quite possible that we're still in a fourth wave and there's one more wave up to go, which would be wave 5, but we would really have to see a close above wave 3, which is around that 1420 mark. This could also be the end of the ride, as we mentioned last week. We also mentioned here, this could either be wave forward or the end of the ride with a retest failure, with a high that was put in around 1420 back in the first week of April. And then we had a retest failure where intraday we got just a couple ticks shy of that and closed lower. So we'll see. As it stands right now, though, the long trend, we see it as done. Unless there's some incredible rally towards the end of the day, we get back above the 50-day moving average, which we doubt. And the 20 and the 30, we see the trend is down. Plus, we're below 1400. Remember, our line in the sand was 1380. But again, if we get back up above 1420, that would increase the odds of a wave 5. Okay. So for the record, the trend is down. We see it as neutral right now. In other words, we think there'll be a better opportunity to short than today. We also think there'll be a better opportunity to get rid of any longs other than today. And it's on a chart-by-chart basis. All right, so this is what we put up last week. We were either looking at a ABC correction, A, B, C, and the ride was over, or we were looking at a bullish 1, 2, 3, sideways fourth, and or remember we said a kind of a down faded wave, provided we didn't take out the bottom of wave 2, and then a wave 5, which would be similar in length to wave 1. So this is what we talked about last week. Quite frankly, we still don't know where we're at. We do know we're below, as of today, at least with an hour to go, below the 50, the 30, the 20-day moving average areas of support. Therefore, we have the trend as down and or neutral. But could this turn out to be a fifth wave still? We're in a fourth wave, and then we get at some point above this 1420, meaning the top of the third wave, and we go into a fifth. Yes. So short term, we have the trend as down as of today, not yesterday, but today, Friday. But we'll see. Things can change. We have to adapt to it, just like all the choppiness in here in last year. If you're going to create or experience a little bit of whipsaw, you want to make sure you jump on the trend in either direction to wipe out that whipsaw. What did we do yesterday? Yesterday in the, let's go back to a daily chart. We are more long than short today, so we're taking some heat. I think the average account is down about 0.40%, 0.40. Where right now the S&P is down 1.62. The good and the bad of that. Obviously, the bad is we're down. But at the same time, if the market was up 22 today, meaning the S&P, we would probably only be up 0.40 or a little bit more than that. Because we do have about 50% cash. But one of the reasons we were able to lessen the bleeding today instead of being down 1.61 is because yesterday, and I put this out in a post, we started to get long as a hedge the SDS, not at the high of the day, but probably right around the middle of the range. And that is actually, obviously less than the blow today because that's up 3.14%. I will tell you that I did trim some of our long positions this morning when the Dow was down around 90. Right now it's down $1.70. And I'll look next week to see what happens. I'm going to look for bounces. Anything that's holding up that we have, smaller individual positions like Disney, even though it's having a tough day, it is still holding the 50-day moving average. It is right around the 20-day moving average. You can't see it on this chart. Above this area here, these candles is good. I think if we take out today's lows, we're going to look to get out of Disney. We can always get back in if it clears this resistance here, and then we would see that as a breakout out of a cup and handle. But at the same time, we don't want to take it down below this trend line as well, and much below the 50-day moving average. So we'll reassess that on Monday. I will. We did exit Exxon the other day for a small loss. We got out. This was a head fake intraday. We were closing above these, or we were trading above these candles. We closed not above them. Therefore, I got defensive on Wednesday, and we exited Exxon right around here. And then, as you guys probably know, oil has just gotten slammed today. So we were out of that. We still have a position in Merck. We'll determine whether or not we'll hold this position going into Monday. Was down quite a bit this morning. But again, it's still above the 50-day moving average, the 30-day, the 20-day moving average. So I'll look at this again Monday. This is not a big position in our accounts by any stretch. Probably represents maybe 2% of an individual's account. Lulu, for those that have it, we did sell some the other day. We sold 50% at $79.54. I have a hard stop on the balance of $77.47. And that hard stop is in the account. VTI is our biggest position, and that's what we are hedging with the SDS. As of yesterday's close, we were still holding the 50. We were right at about the 30-day moving average and the 20-day moving average. Obviously, today it's down considerably, especially at this time. So we did sell some this morning. I believe it was above 70.76. We're at 70.29. And I'll just have to wait to see what happens Monday. And that will determine what we do with the SDS in terms of stops and what we do with the VTI. Ideally, what I would like to do is put a stop right above entry, our entry the other day, so we don't turn the SDS into a losing trade. And that way, if we're out of the VTI and the market continues to fall, we will be profitable. But anyway, as always, cut your losers short and quick. Let your profits flow. You can wipe out any losses provided you manage the money properly with a decent trend, either to the downside or to the upside. Let's take a look at treasuries. Specifically what we cover each week, the IEF. It's breaking out. No two ways about it. It looked pretty weak on Tuesday, but we have since, obviously today, surpassed the highs of the past couple weeks. And when we look at this on a daily chart, on a weekly chart, it looks good. You know, if you wanted more confirmation, you could wait till we get above these highs. And tight stop. What are we looking at in terms of bonds? I'm keeping an eye still on JNK, high yield ETF. We're just looking for a close above this line with a tight stop percentage-wise. Pays a nice yield, I believe, a little over 7%. Gold, we tried to play a bounce here, not in the managed accounts, but I played it in the futures. I got out. I actually got out. Where did I get out? I got out this day here. But I have been short this as a core position, not in the June contract, but in the DZZ for quite some time. So I think possibly gold could bounce, but right now everything's uncertain with the overall trend in gold, other than it's down. We're below the 50-day moving average. I thought maybe last week we would get a bounce up to this 164, 166, which is 1,700 on the futures, but it didn't happen. It still may happen. My concern, though, is that these lows are going to be taken out. So we're flat on gold, flat on treasuries. As of today, we do have a position, just to recap, in VTI. We started to hedge that yesterday with SDS. We sold some VTI today. So we're almost hedged 1 for 1. We think the market is a little oversold here. Today, we think we'll get a bounce back up into 1380, possibly into the 50-day moving average around 1390. Then it's anybody's guess from there. That could be an opportunity to short. We're going to be in this kind of thick trading range here for a while, between 1360 and 1420. But again, for the record, as of today, we have a neutral stance, but the overall trend is down unless there's some significant rally with 1 hour to go. And we'll recap again on the S&P with the weekly chart. What we looked at last week, we're either in a 1, 2, 3, fourth sideways wave with a fifth wave up yet to come, or the ride is over. A, B, C is the corrective wave, and then it's done. Then we start heading down. It's too early to tell. So we're defensive right now, and we're almost hedged 1 for 1. We're keeping an eye on Disney. We're keeping an eye on Lulu, and we're keeping an eye on Merck. All right, you guys, that's it. Doug McKay, antiwallstreetguy.com, with about 64 minutes until the close on Friday the 4th. S&P down 22, almost at the lows for the day. We'll see you next week. Thanks.